Hello everyone, in this video we will be going over A-Level Accounting 2023 February-March Paper 2 question number 1. So this is the structured paper 2 which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks, and we have a total time limit of 1 hour and 45 minutes. And since the first question is of 30 marks, ideally we should be spending about 35 minutes in order to complete this question. And in this video as well, we will be attempting to solve this question under 35 minutes. I'll have the link to this question paper as well as the mark scheme in the description box below. Okay, so without any further delay, let's get started. Nibras and Raif are in a partnership and they own a car hire business. The following balances were available at 31st December 2022. Alright, now we're also given additional information. Let's have a look at it. Interest at 10% per annum on the loan from Raif is accrued for the last 2 months of the year. So we have the loan from Raif right here, and the loan amount is of 9,000. So let's figure out the interest per annum. So that is just going to be the total amount of loan of 9,000 multiplied by our rate of interest of 10%, which results in 900. So this is the total interest that we need to pay for an entire year, but we're also given the interest on loan from Raif right here, and it is of 750. So this amount just indicates the loan amount that has already been paid. So the difference between this paid amount and the interest charged for the entire year is going to be the accrued amount for the last 2 months. So that is just going to be 900 minus 750. So that's 150. So this is now our outstanding amount that we still need to pay, which will go towards our current liabilities. Then for the second part, we have insurance payments covered the period from 1st January 2022 to 28th February 2023. So that's one entire year. So that's 12 months, as well as 2 extra months for the January of 2023 and February of 2023. Monthly insurance costs have remained unchanged during this period. And we have our year end at 31st December 2022, which means that we only need to figure out the expenses and incomes for the period of 1st January 2022 and 31st December 2022. So we should not be including the insurance payments for the month of January and February 2023. So let's have a look above. We're given insurance payment right here. So that is 15,400. And this is for the 14 months, because 12 months will be for the year 2022 and the 2 months are of the year 2023. So for 14 months, we have the insurance payment of 15,400. This just means that for 1 month, our insurance payment will be 15,400 by 14. So this is just the use of simple unitary method. Now we require it for 12 months. So for 12 months, that will be 15,400 divided by 14 times 12, which results in the amount of 13,200. So this is the amount to be included in our statement of profit or loss. Now this is the total amount paid, whereas this amount relates to our current year, which means that the difference between these two amounts will act as our prepayment of insurance. So that's prepayment of insurance. That's going to be 15,400, which is the total paid amount, minus 13,200, which is the amount for the year ended 31st December 2022. So our prepayment is of 2,200. And since this is the prepayment of expense, this now will act as our current assets. Alright, now for the third one, the partners have agreed that the allowance for irrecoverable debts. So the allowance for irrecoverable debts is a new term for our provision of doubtful debts, is no longer required. Alright, so we can see that we were given the allowance for irrecoverable debts right here. And this is our opening balance of allowance. And now we are told that the allowance for irrecoverable debts, which is our closing balance, is no longer required. So that is just going to be 0, right? And in cases of provision for doubtful debts, we just used to compare our opening balance with our closing balance and see if there was an increment or a decrement. In this case, our opening balance is 380, whereas our closing is 0. So there is definitely a decrement, right? So this decrement is of 380 minus 0, which again is 380. And always remember that the increment in allowance for irrecoverable debts will act as our expense in case of our statement of profit or loss, but if there is a decrement, it will act as our income. So this just means that this 380 should be treated as an income in our statement of profit or loss. Now for the fourth one, rent receivable by the partnership is 550 per month. So let's figure out the rent receivable per annum. So rent receivable per annum. So if 550 is for 1 month, we just multiply it by our total number of months, which is 12. And this results in our total rent receivable for the year to be 6,600. So this is the total amount that is for the year ended 31st December 2022. But we can see that the rent receivable is actually 6,050. So this is the actual rent that we have received, which just means that we are yet to receive whatever difference is between this amount and the actual receipt that should have been made. So that difference is 6,600 minus 6,050, which results in 550. And this is the amount that we are yet to receive, right? So this will now act as our current asset. Now, motor vehicles are to be depreciated at 25% per annum using the reducing balance method. So in case of reducing balance method, our formula for the depreciation charge is just going to be net book value times our rate, right? And we can see this is for the motor vehicles. So motor vehicles is given right here. We have our cost as well as the provision for depreciation. And our net book value is just the difference between these two. So that's 144,000 cost minus 33,200. This results in our net book value to be 110,800. Now we just multiply it to the rate given, which is of 25%. So that's 110,800 times 25%, which results in the depreciation charge for the year to be 27,700. This should be treated as an expense in our statement of profit or loss. Then premises are to be depreciated by 2% per annum using the straight line method. So if we're calculating depreciation using straight line method, we just multiply our rate to the cost rather than the net book value. And in this case, the cost of our premises is given right here. It's 220,000. So we just multiply 220,000 with the given rate of 2%. This results in the depreciation charge to be 4,400. Okay, that's all for our additional information. Now we need to prepare our statement of profit or loss. So the statement of profit or loss is the new term for our income statement. And the format still remains the same, which means that we will start with our revenue. So there were no adjustment to be made to our revenue, which means that we can just write down this value. This is the revenue from car hire, which was of 88,300. Now, normally, if there was a trading business, we would have included our cost of sales section, right? But in this case, we know that it is a car hire business, which means that this is a service providing business. So for a service providing business, they do not have to purchase any sort of goods for resale, which means that our cost of sales section will no longer be present in case of service businesses. It will only be present in trading businesses. So we can just move towards the next part, which would be to add all of our incomes and subtract all of our expenses. And we have already figured out that there was a decrement in allowance for irrecoverable debt, which will act as our income in this case. So let's add it. That will be our income section. And we have already figured out its amount to be 380. So that's the amount to be included in our statement of profit or loss. Then we also have another income in the form of rent receivable, and we've already figured out the rent receivable per annum to be 6,600. This is the amount to be included in the statement of profit or loss. So that's a rent receivable. So this concludes all of our income. So let's figure out the total by adding these two amounts. So that's 300 plus 6,600, which results in 6,980. All right, now we can move towards our next section, which would be to subtract all of our expenses. All right, so the first expense would be our depreciation on motor vehicles and depreciation on premises. So for motor vehicles, it's 27,700, and for premises, it's 4,400. That is our depreciation on motor vehicles. That's of 27,700, whereas the depreciation on premises is of 4,400. All right, then we also figured out our interest per annum on the loan provided by Raif to be 900. This will also act as our expense, so let's include it. That will be our interest on loan, and this is the loan from Raif. It was of 900. All right, then we also figured out the total insurance amount for the year, right? The total insurance amount for the year was of 13,200. This will act as our expense. So that's insurance 13,200. Okay, these are all of the expenses that we have adjusted. Now let's have a look at our table. We also have our wages and salaries, which is also an expense. So we need to record this amount of 18,460. So that's wages and salaries of 18,460. Then we also have repairs and maintenance cost. It will also act as our expense. That's of 8,270. That's our repairs and maintenance of 8,270. Okay, then we have already included the depreciation for premises, depreciation for our motor vehicles. We also have our motor vehicle expenses. This is also to be included in our statement of profit or loss. It's of 12,420. That is our motor vehicle expenses of 12,420. After that, we've already included all of this. We don't include drawings, current accounts, and capital accounts, as well as the cash in our statement of profit or loss, which means that we have completed all of our expenses. So let's figure out the total for expenses by adding all these. So that will be 27,700 plus 4,400 plus 900 plus 13,200 plus 18,460 plus 8,270 plus 12,420, which results in 85,350. Okay, we can now figure out our profit for the year. It is just going to be our total of revenue plus our incomes minus our expenses. So that's 88,300 plus 6,980 minus 85,350, which results in 9,930. This concludes the first part. Now, okay, we were given the working section right here. So instead of scribbling all over the question paper like this, you guys should be showing all of these in that particular box. Now we're given additional information. Nibras and Raif agreed the following terms for the appropriation of profits and losses. So the interest on capital is to be 10% per annum. Let's figure out the interest for Nibras as well as Raif. So we first need the capital amounts, which was given above. We have the capital right here. So that's 180,000 and 120,000. So that's 180,000 times 10% for Nibras, which results in 18,000. Then we have 120,000 times 10%, which results in 12,000. This will be our interest on capital. Then we have Nibras to receive a partnership salary of 6,000 per annum, and the remaining profits and losses to be shared in the ratio Nibras to Raif 3:2. We are not given any of the information regarding our interest on drawings, which means that there will be no interest on drawings. Now, we need to prepare the appropriation account for the year ended 31st December 2022. We first start with whatever profit for the year that we have figured out from our statement of profit or loss. And we just figured it out to be 9,930. So let's start with that amount. We have our profit for the year to be 9,930. Then the first item to be adjusted is our interest on capital. And remember that interest on capital is something that the partnership needs to pay to its partners, which means that it will definitely reduce our profit for the year. So that's going to be minus interest on capital. And we need to write it down for both of our partners. So that's Nibras as well as Raif. We already figured out that for Nibras it's going to be 18,000 and for Raif it's 12,000. So the total of these two amount is going to be 30,000, and we should be subtracting this. The next one we need to adjust would be salary. Again, salary is something that the partnership will pay to its partners, so it will also reduce our profit. So that's going to be minus salary, and this is only to Nibras. So that's 6,000. And after adjusting these two amounts, we now get our residual profit or loss. So let's first figure out the amount. That will be 9,930 minus 30,000 minus 6,000, which results in negative amount of 26,070. This is our residual loss. Now we need to figure out the share of residual loss for each partner. So that's for Nibras as well as Raif. And we're given the profit sharing ratio to be 3:2. So we have the amount of 26,070. For Nibras, it's going to be 3 out of the total of 5 parts. So that's times 3 by 5, which results in the amount of 15,642. We repeat the same process for Raif. So we have the total of 26,070. And out of the total of 5 parts, 2 parts will belong to Raif. So that's 2 out of 5, which results in the amount of 10,428. So our share of residual loss for Nibras is going to be 15,642 negative amount and 10,428 negative amount for Raif. This concludes the appropriation account as well as the second part. Now we are again given additional information. The partners would like to know what difference it would have made if they had operated without a partnership agreement during the year ended 31st December 2022. So if there were to be no partnership agreement, then it would just mean that we will have no interest on capital, we'll have no salary, and the profit sharing ratio would be 1:1. Because if there is an absence of partnership agreement, then the profits and losses are to be shared equally among our partners. All right. Now the question is, calculate by how much Nibras's current account balance at 31st December 2022 would have been different if he had no partnership agreement during the year ended 31st December 2022. So we first require Nibras's current account balance. If there had been the partnership agreement that we did before, then we have to prepare Nibras's current account balance again to see what the balance would have been if there was no partnership agreement. Okay, so let's figure it out for with agreement. And we can only prepare Nibras's current account balance. So that's the current account for Nibras. Let's have a look at our opening balance. We have the current accounts right here. And for Nibras, it's 5,950, but on the debit side, which just means that our opening balance will also have the same amount, but on the debit side. Let's write it down. So that's our opening balance on the debit side with the amount of 5,950. Then the next item to be included in our current account would be our share of residual loss. For Nibras, that's 15,642. So all of our losses are to be recorded on the debit side and all of our incomes are to be recorded on the credit side, which means that we just record this amount of 15,642 on the debit side. So that's 15,642, which is the share of loss. Then we also need to include any sort of interest on capital. So interest on capital is being received by Nibras. So that definitely is an income for Nibras. So we just need to record this amount of 18,000 on the credit side. That's our 18,000, which is the interest on capital. And Nibras also received salary. And the salary was of 6,000. Again, this is something that acts as an income to Nibras, which should be recorded on the credit side. So that's 6,000 as our salary. We then also need to include any sort of interest on drawings as well as drawings. But in this case, we don't have any interest on drawings, but we do have drawings given above. And the drawings for Nibras was of 19,200. And in our current account, the drawings are always to be recorded on the debit side. So that's 19,200 as our drawing. Now we just need to figure out the heavier side and the balancing figure or the closing balance. In this case, it is pretty clear that our debit side is the heavier one. So let's figure out the total. That's 5,950 plus 15,642 plus 19,200, which results in 40,792. That will be the balance for our credit side as well, which means that our balancing figure or the closing balance will be right here. And in order to figure out the closing balance, we just need to subtract all of these from our total. In this case, that's 40,792 minus 18,000 minus 6,000, which results in 16,792. We need to record it as our opening balance on the debit side. And remember that I already told all of our losses are to be recorded on the debit side and all of our incomes are to be recorded on the credit side. And if this amount is on the debit side, this just means that it's our loss. And losses are always a negative amount, which means that our opening balance or NIBRAS's current account balance, according to the partnership agreement given above, was negative 16,792. Alright, now we just need to repeat the same process but without agreement. So that's the current account. Again, it's only going to be for NIBRAS. Our opening balance will not change because that was given already in the question itself. So that's going to be our balance BD with 5,950, and our drawings amount will also not change. So that's going to be still on the debit side with the same amount of 19,200. But our share of loss will now be changing because in this case, since it is without any sort of agreement, we don't have to include all of our interest on capital as well as salary. And another thing to remember is that if there is no partnership agreement, then the interest on loan will be at 5% instead of 10%. So we now need to figure out the interest per annum. But this time we'll be applying the rate of 5% instead of 10%. So we had our total loan amount to be 9,000. That's still going to remain the same. But we now multiply it by 5%, which results in our interest to be 450. So instead of applying the interest per annum of 900, we will now be applying the interest per annum of 450. This will definitely change our profit for the year as well. So let's figure out our new profit for the year. So we'll start with the previous amount, that's of 9,930. And remember that we have already subtracted this 900 as part of the interest on loan at 10%, but we do not need it right now, right? So since it was previously subtracted, now we just need to add it in order to rectify this error. So we're going to add the 900 back, but we're going to apply the new interest of 450. And interest is definitely an expense, so we will be subtracting the 450. And this results in the new profit for the year to be 10,380. Now, for the appropriation account, we'll now start with the amount of 10,380. And remember that we do not pay out interest on capital if there is no partnership agreement. So that's going to be 0. There's also going to be no salary. So that's again going to be 0, which means that our residual profit is still going to be 10,380. And now we just need to divide it among our partners. But since we're only preparing the current account for NIBRAS, it's okay if we only figure the amount for NIBRAS. So that's the total amount of 10,380 multiplied. And since we do not have any sort of partnership agreement, we share the profit equally among our partners. So that's just going to be 1 out of 2 parts for NIBRAS, which results in the amount of 5,190. So this is the share of profit for NIBRAS in this case. And profit will definitely act as an income for him, which means that this will be recorded on the credit side of our current account. So that's our share of profit of 5,190. And since there is no agreement, there will be no interest on capital, no salary. And the share of loss now becomes our share of profit. And this concludes everything. So we can just figure out the heavier side. Again, in this case, it's pretty clear that the heavier side is our debit side. So the total amount is going to be 5,950 plus 19,200. That's 25,150, which is the same for the credit side as well. Now let's figure out our closing balance. In order to figure it out, we just need to subtract this from our total amount. So that's 25,150 minus 5,190, which results in 19,960. Again, let's record it to the other side as our opening balance. So that's 19,960. All right, so let's figure out the difference or the change. So we have the previous balance to be 16,792, but since this is on the debit side, it represents our loss. So this amount is negative. And our new balance is of 19,960, but again, this is on the debit side, which means that this also represents a loss. Now we have a negative amount, but the increment in negative amounts. So this definitely acts as a decrement. So this just means that NIBRAS's current account balance will now decrease. So the decrease, we need to figure it out. So that's going to be 19,960 minus 16,792, which results in the decrement amount to be 3,168. This concludes the third part of this question. Let's move to the fourth one. The partners had considered changing interest on drawings as part of their agreement. Now we need to state one reason for including interest on drawings in a partnership agreement. So the interest on drawings will basically deter a partner from making any excessive drawings, because if he takes a large amount from the partnership, it just means that he will need to pay back a higher amount as part of the interest on drawings, right? So we can write it down. Interest on drawings will deter a partner from making excessive drawings. Now for the fifth part, we need to state the double entry for recording the interest on drawings. So remember that interest on drawings is something that is needed to be paid by the partners, right? So it will definitely be paid out of their current accounts, which means that on the debit side, we need to be recording our partner's current account. And this interest will now be received by the partnership through the appropriation account. So we need to write down the appropriation account on the credit side. This is because we'll be subtracting the interest on drawings or adding it as part of the losses on the debit side in the partnership current account. So that's a negative amount. And in the appropriation account, we will be adding the interest on drawings because it is being received by the partnership, which acts as a positive. All right, this concludes the fifth part as well. Let's move towards the sixth one. We have additional information. Nibras and Raif would like to expand their business, but they require additional finance, and they have considered two options. So Nibras is to introduce additional capital by selling some personal investments, or they are to arrange a bank loan. We now need to advise the partners which option they should choose by justifying our answer, discussing both the options. Okay, let's discuss option one. So if Nibras is to introduce additional capital, then it will be the permanent source of capital which will not have to be repaid in the future. So will be a permanent source of capital. But if Nibras is introducing a higher amount of capital as compared to Raif, then it might be the case that Nibras will expect a higher reward or more control of the business. Let's write it down. Nibras may expect more control of the business. Okay, it's of 7 marks, so we need to write down one more point. And if Nibras introduces additional capital, it will not affect the profit for the year, because the partnership would not have to pay any sort of interest to this additional capital. Let's write it down. Will not affect the profit for the year. Or profit before appropriation. Now let's talk about option 2, which is a bank loan. Bank loan is definitely a temporary source of finance, so it will have to be repaid in the future. So temporary source of finance which needs to be repaid in the future. Then we will also need to provide an interest on the bank loan, which means that it will definitely reduce our profit for the year. So interest charges will reduce the profit for the year. And since there will be no additional contribution by any sort of partners, it means that the proportions in which the partners have contributed to the business will not be affected. Let's write it down. Will not affect the proportions in which partners have contributed to the business. Now, based on these factors, we need to advise the partners which option they should choose. Since we already had a share of residual loss previously, I would go with the option 1, in which NIBRS will contribute the additional capital so that there will be no additional interest charges, which might reduce our profit before appropriation. So let's write down our decision clearly. The directors, no, there are no directors in this case. The partners should choose option 1. All right. This concludes our question number 1 of 2023, February-March, paper 2-2. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to this channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.